The quantum threat is real and it's coming much faster than everybody is anticipating. I'm going to have Charles Hoskinson on today. It's going to be a good one. I do want to kind of start off with this right here, and that is Google's quantum warning. Could Bitcoin really be hacked in 9 minutes? This is kind of the breakdown and also the narrative that has been pushing for about the last 6 months, and the acceleration of this has even surprised me. Someone who's been in tech for a long time, I kind of question whether or not this could be done. And we've had several people on before talking about this very issue. Justin Drake was on not too long ago, and even then he wasn't really mentioning that, but I want to play a clip for you before we bring on our guest. Take a look.
Most recently, I heard you say you think qDAO would be roughly around 2032. So is that still kind of your timeline?
The specific number that I put forward publicly is that there's at least a 10% chance that we'll have one of these crocs by 2032. And 10% chance, for Ethereum is enormous, right? We can't take this chance. Now, over the last 3 weeks, basically, I've been obsessed with these neutral atoms, and I'm not ready to make a final prognostication, but my qDAO is going to come forward. So it's likely not going to be 2032 anymore. It's going to be a smaller number.
All right, so that is one of the lead devs over there with Ethereum. Of course, we've talked to him at length about this, and now we're starting to see much more alarm in the community. One of the people that is bringing the alarm signal up has been Charles Hoskinson. YouTube took down his BIP 361 proposal, and we're going to talk to Charles about that today. And we wanted to bring him on the show and welcome him in to PBN. How's it going, Charles?
Hey, Paul. Thanks for having me on.
All right, so you saw some of the lineup there. You saw Justin talk about moving forward their plan. Quantum threat is real. You see this as a major issue right now. When you look at the current state of where we are, how dire is this really?
Well, what you do if you want to have some degree of objectivity and transparency to the process is you kind of widen the aperture and you say, who has the strongest incentive to care about the problem? So the U.S. government does, the U.S. military does, the intelligence agencies do, because it's life or death for them. So the thing I look at is DARPA's QBI, the Quantum Benchmarking Initiative. So it's an open project. 11 major companies from IBM to Quantinium are participating in it. And basically what DARPA did is they brought together all the physicists and engineers, and they're through a 3-stage process trying to figure out, are we going to have a working quantum computer by 2033? And if so, what can that computer do? Can it break encryption? Can it do quantum chemistry and all this other stuff? So 11 of those companies have passed through the first gate, gate 1, and there's 2 more. And so we'll probably know within the next 12, 24 months, is this a near horizon problem, or is this a problem that's longer horizon, like the 2040s or 2050s, as Adam Back believes? So regardless, you look at where the standards are at, do we have countermeasures to defeat quantum computers? And the entity you look at for that is NIST. Whether you agree with them or not, they control the Department of Commerce's opinion and all U.S. government procurement, and thus all hardware in the United States. So they do what are called FIPS. And FIPS are standards that the U.S. government adopts for cryptography. So FIPS 203, 204, 205, and 206 are the post-quantum standards, and they have both on the hash and lattice side a variety of good options. And so we have countermeasures, and we have basically a group of people that are waking up every day telling us when qDAO is going to occur, if it's going to occur. So there's a natural question to ask, well, why hasn't the space just adopted this stuff proactively? Like, what's the harm? And the problem is post-quantum stuff is much less efficient and much bigger in signature size than than elliptic curve, excuse me. Elliptic curves are awesome. You have lots of optimizations, and they run really quickly, and they're very small signature sizes. If you look at a Stark, for example, you're talking about a 40 to 200 kilobyte signature. And when you look at a comparable elliptic curve, you're talking about like half a kilobyte or smaller. And when you look at lattice-based, it's smaller, but it's still in the kilobyte range. So nobody wants to be the guy to say, hey, let's go adopt this thing for this thing we don't know is going to happen, that we're going to take a 10 to 100x performance hit in terms of TPS for our blockchain for. Let's do this a little bit more slowly. And that's why we've seen a resistance to wholesale adoption. But some blockchains have been leading, like Algorand, for example, with the Falcon signature scheme, and other ones that's their entire raison d'etre, which gives us pretty good data on, and practice what these things look like at scale and what they can and cannot do. Ethereum has also been a pretty big leader with the Stark side. They've been very aggressively pushing towards post-quantum. So it's, it's nice to have those data points, but Bitcoin in particular has some hard decisions to make.
Hard decisions. Who would you say is closest right now of the blockchains that are currently out there that are somewhat active around? Who would you say is leading the pack?
Well, some are easier to secure and faster to secure. Other ones are much more complicated. Anything in the proof of stake space, a lot of work has to be done. Anybody in the zero knowledge space, even more work has to be done. If you're proof of work, you don't have to do too much. You just have to secure your signature scheme and be comfortable with your hash size for your puzzles because of Grover's algorithm. So Bitcoin has further behind, but they easily could add a post-quantum scheme. Things like Ethereum or Cardano or otherwise, you have to think about your VRF or your VDFs. You have to think about your zero-knowledge strategy. So there's just a lot more work to do, which is why they're more involved. We have the algorithms. We have the quantum analysis. We wrote a paper in 2019 on Bitcoin, specifically if there was a quantum adversary, explaining what's a problem and what's not a problem. So, we've been thinking about it for 7 years. So I'd say, if you look at Cardano, Midnight, Algorand, or Ethereum, or any of these things, we're going to be okay in the 24 to 48 month time horizon. On the Midnight side, we have a project based on work from Stanford and Microsoft called Nightstream that we're doing with the Linux Foundation, the LFDT. And that's going to give us a post-quantum foundation. And on the Cardano side, we have a lot of things that we're starting to pull into Cardano over the next 12, 24 months to do that. But what we're slated for is it's got to get all tied up with a bow tie before the end of the decade. And I think that gives us a comfortable margin for this.
Coming fast for sure. We've had Paul Stork on before. He's a longtime Bitcoin developer. You may know him out there in the community.
Yeah.
He's proposing a fork that would reassign part of Satoshi Nakamoto's 1.1 million tokens. The plan is to copy Bitcoin into a new chain called eCash. I think it's actually doing a countdown right now and 115 days out. What do you make of this one in terms of a possibility?
When's the crowd sale?
Yeah. Okay, I get you. So is there any other solutions out there besides what you're proposing?
Yeah, I want to be fair to Paul. So the problem is that there's no good solution right now for Bitcoin because it requires interaction. I ran into this with the ADA sale where there were vouchers sold for Cardano 2015 and about 99.7% of them redeemed and they're now out there. But then there's a small group of people, they do nothing. And if they end up falling into insecure addresses, what do? You have to develop some sort of custodial system. So in our case, we had KYC data. So we could create an off-chain process for that. The problem with Bitcoin is they don't have ownership associated with the initial distribution. And so when you have kind of three options, you can do nothing, in which case about 6.8 million coins are vulnerable at rest. And then all future spending is problematic. So that's not good. You can do what BIP 360 proposes, which is use what's called pay-to-Merkle route, and you had a post-quantum signature, and then people can migrate of their own accord, and the people who don't migrate, their funds are effectively going to get stolen for the legacy addresses. Or you can do what Paul is advocating or what BIP 361 is advocating, and instead of just adding the signature scheme, you also freeze the legacy accounts and you create a migration path. So in the case of BIP 361, what they're saying is we're going to create a zero-knowledge proof, and if you can prove that you own the BIP 39 keywords, you can redeem, and that would be post-quantum. Awesome.
Okay.
But there's still 1.7 million coins that you can't do that because that standard didn't exist until 2013. Bitcoin was created in 2009. So Paul is like, well, what do I do with those 4 years of history? You can create another chain and migrate that over and then, use that as an off-chain redemption mechanism. But the problem with that, a hard fork, Bitcoin won't really understand how to reconcile that accounting, and those coins will be stolen and put into circulation. So unless you're willing to admit a hard fork, then you're not going to resolve the theft consideration. And if you do a hard fork, under what legal authority do you have to seize other people's property?
Yeah,
there's no escheatment process, and this is the problem with not having on-chain governance. There's no terms of service to seize people's assets. It's illegal.
Yeah, this is a major challenge. I mean, you look at the probability of what would get done here. Where would you put it in the camp of what's most likely to occur? Because this is going to have to get addressed. It's not a if, it's a when.
So the most likely outcome is the adoption of something like BIP 360, where they add a post-quantum signature scheme using the taproot construction, and they allow the coins to be stolen. And the argument for that is, look, we survived Silk Road, we survived Mt. Gox, we survived bigger events. It's okay for a temporary cycling of 10 or 20% of the supply, and exchanges and off-chain processes can probably be used to somewhat resolve that. And also, people knew the risk. They were given informed consent. They said, hey,
Yep.
you don't move, it is what it is. The challenge is that people like BlackRock and these other large scale holders who have a massive influence now over Bitcoin, they're not going to be super comfortable with this concept that magically 20% of the supply is going to be seized by North Korea and dumped on the open market. It's just a regulatory, logistical, and value nightmare. They have fiduciary obligation to their shareholders for their structured financial products. So they have to advocate for avoiding the theft, which means they have to advocate for a hard fork to prevent that from occurring, because it's easier for them to just take those coins out of circulation, kind of makes their individual coins more valuable, and they don't have to deal with the theft and the dump. So that's where you're going to have a big cultural clash, and it may actually break Bitcoin or not. We've never had a situation where a company with over $10 trillion in assets is on one side, and the philosophical Bitcoin people are on the other side, and they're inevitably going to reach a conflict.
Yeah, this is, listen, it's been all brewing for quite some time. So here we are right in kind of the midst of this right now. What about Midnight and Cardano? What would you say you could enable for Bitcoin security right now or in the near future?
Well, we do the quantum research, and we worked with, amongst others, because we have one of the largest research groups in the world. We have 168 scientists that we work with and probably a dozen institutions. We published about 250 papers. So we have a lot of academic stuff and we were actually the first to prove Bitcoin was secure. It was the GKL 15 paper, which is one of the most cited papers in the industry. So we have a lot of academic stuff about things they can do. And we've written BIPs in the past, and they've never been adopted, but they can certainly cite and gain inspiration from that. And then obviously we're a UTXO system, they're a UTXO system. So if they're considering it like the real life implications of a post-quantum signature scheme, they can look to Cardano as a case study of what impact does that have on a system like theirs. So there's some analogies that one can draw there. But ultimately, there's not much we can do because there's no good answers here. They don't have a governance system or a constitution. We do. So when these things come up, we take a vote, a decision's made, we move on. And it's not really a problem. With Bitcoin, there's no means to take a vote. So no matter what happens, you'll basically have some form of fragmentation in Bitcoin Classic and other things. And it's an unavoidable thing because it's an adversarial capability. It's like a group of pirates are sailing and your house is unlocked and the vault is unlocked. And who knows if they come in 5 years or 10 years, but you're making a decision, do we just leave the gold in the vault or do we take it? So BIP 361 is take the gold and move it somewhere else, or maybe just destroy it because we can't do anything with it. And BIP 360 is give people the option to move their gold, and anything that's left behind, the pirates are going to steal. There's not much Cardano or any other ecosystem can functionally do for that. That's a Bitcoin specific concern.
Yeah, for sure. I want to move over to Midnight. I'm looking at the Midnight Passport teaser here, and I'm noticing a couple of things here. One I wanted to notice was the accredited investor verification there. Why go that route in terms of adding accredited investments into something like a Midnight platform?
Well, I mean, the real world asset space is the fastest growing vertical. We already have some of them. They're called stable coins, and they trade trillions of dollars every year, and they're effectively under the hood tokenized treasury bills, right? So RWAs are here to stay, and a lot of people like Securitize and dozens of others have tried for years to create standards and bring them about. The challenge is to play with these types of things. You have to have some blending of identity and wallets to do the KYC, the ML, the suitability guidelines, to restrict certain jurisdictions and other things like that. That's really hard to do unless you have a privacy system. Because if you do it in just a native blockchain way, your PII goes onto the blockchain. Everybody can see it forever. Bad news. So with Midnight, because we can cover this use case, we can cover it not just for ourselves, but for every blockchain, like Ethereum and Bitcoin and Cardano. It's kind of a natural extension, and people can pay a fee. What makes us different from other systems is the self-sovereign concept. So other systems, a central authority owns your identity or some federation of them, and basically they control as a gatekeeper whether you can use your identity or not. What we do is we have DIDs, and it's self-sovereign identity. You own that, and then you basically go and verify what you choose and choose how to do that. And then you use selective disclosure through zero-knowledge disclosures to prove properties of things. So one of the most common patterns is actually blacklisting the United States. So you have yield-bearing stablecoins, not really legal in the United States. So a lot of people say, well, if you're a U.S. resident, you can't participate. Even the president's children did this with World Liberty Finance. So pretty much from the top down. Okay. Well, how do you prove you're not under U.S. jurisdiction? The naive way would be for you to give me your address. And I say, oh, well, you're in Gibraltar and you're not a U.S. citizen. Okay, so you're probably outside of jurisdiction. But what if you had ability to do a zero-knowledge proof that proved you're not under an American IP address and you're not under American jurisdiction, but you don't actually tell me where you're at and who you are? So that's the space that Midnight operates in, is to build a collection of partnerships and capabilities and technologies. And then at the DApp level, not the protocol level, the DApp level on a case-by-case basis, people can build this in and kind of put it into their wallet, and they control the credentials and the assets. And some are more restrictive, like a government ID system would be, a voting system would be, a clearance system would be, like the CAC card system for the military, for example. And others are much more open and voluntary, and they're based on open standards and things like that. And what we did is we built the technology for both to coexist in the system. And it's not at the protocol level, it's at the DApp level. So there's no escrow keys or backdoors or things like that. And the operators of the system don't see or care. They're beneath that.
So this is this is kind of one of the things that we've talked with Canton about, which is the privacy side of thing. But why would Canton need to exist if you have this more advanced layer of privacy, and now you're doing Midnight works with banks already? So why would you need Canton if this exists out there?
Yeah, this was kind of, you're old enough to remember, and I'm old enough to remember because we've been in the industry a while, like the big fight between the consortium chains and the open systems. So you had like Fabric and R3 and all these other things. They said all these permission blockchains are just going to rule the roost. And then everybody started picking like Solana and Ethereum and other things. So it's much the same. Like, what is the home of what we call Web 2.5? So when you look at things like Circle or Binance or Tether, they're not quite Web 2, they're not quite Web 3. So they have a token, they have an asset, they have an ecosystem, and it's trading on cryptocurrency rails, but usually there's some form of regulated financial business with owners and licenses, and it's in a jurisdiction on the other side. So that's your Web 2. You put them together. So there's a question of what should the home be for that? Should people build their own chains like Circle is doing with ARK and Binance did with BNB, and now you have Canton, where there's kind of a consortium of things? Or should you build open infrastructure where everybody can, no matter what their Web 2.5 business is, can come and they can do both things comfortably? So Monument Bank, for example, has chosen to come and bet on that paradigm, like many people before bet on Ethereum. And we'll see what the market decides. There's advantages in a federation. Typically, they're faster and cheaper, and maybe they have some more vertical integration. The disadvantages is a club, and you have to be invited into that club. And so if you don't meet their suitability guidelines, basically you're shut out. So open networks, there's no club. Anybody can come and join, anybody can come and do anything. And I think our industry has preferred open gardens over walled gardens throughout its history. So that's what we're doing. And we'll see in the court of public opinion which side runs. We think the privacy tech and the standards that we're betting are pretty good. The other thing is, where do the agents live? That's the single biggest user growth in cryptocurrency in the next 5 or 10 years. It's not going to be people, it's going to be AI. Because what we want to do is we want to delegate authority to an agent and have them just do a bunch of stuff. Because crypto's hard. I don't want to really know how Ethereum works or Canton works or all this other stuff. I just want to buy stuff and like make sure that people don't steal from me. So what I'm going to do as agents get smarter is delegate to them through standards like the open wallet standard, and they'll talk to each other through X402 and these other things. So where does that live? If you have a closed system, those people gatekeep what the agents can and can't do. If you have an open system, your agents can do whatever they want to do with any chain, any open system. So that's another reason why I think long-term the open systems are going to win over the closed systems. And everything we've done has always been open. Sometimes people disagree with it, but it's very clear we have a strong commitment to decentralization, even when it's cost us adoption in the past. So we're just carrying those principles forward into Midnight.
You look at the Midnight Monument program. Why not? Okay, so why not just list it on, like on our RWA? If this was equated out there, if you look at represented right now, this would end up falling. You'd end up somewhere probably in the top 3, maybe top 4.
Yeah.
Why
It's
not
probably
just go
going to
that
have,
route?
yes, it's not just tokenized deposits. It's like the whole stack. It's like
Right.
asking the question, what would a bank of the future look like? Because it's going to change. We now have a payment system and all this other stuff, and the protocol's doing it. It's not the legacy system. So how do banks compete and what do they do? And this is kind of the conversation with it. So you start somewhere, tokenized deposits, but then you're really having a deeper conversation vertically and horizontally. So vertically is what other services could be added in, like insurance
Right.
products or structured financial products or what have you. And then how do you create bespoke experiences for high net worth individuals and these things? And the horizontal is how do you get more banks in, and you kind of create a whole network within a network, and they can have reciprocity and bypass the legacy financial system entirely. And the advantage they have is they get to set much more fair rules, better rules, and ultimately, have cheaper operating costs. If you look at a bank, compliance is often the most expensive component. It's about a third of their budget and their people, and
Right.
it's horrendous. You could buy Tokyo every year for every 3 years for the global cost of compliance. It's about $500 billion a year. And you look at like compliance failures, JP Morgan Chase, I think, has $19-20 billion in fines over the last 20 years. And so if the largest bank in the world is getting like 11-figure fines for not
yeah.
following the rules, what the hell chance does anybody have in a global economy where everything changes every 6 months or 12 months? So what they want to do is just create synthetic networks that are above jurisdictions, and they have zero knowledge proofs and predictability, because if they do that, massively easy to automate, massively easy to optimize, and you see like an order of magnitude reduction in the operational cost. So these smaller banks, it's extremely appealing to them because they don't have a balance sheet with $2 trillion
Exactly.
on.
Yeah.
They need to
Yeah.
compete, but they're still big. They're like $25 billion, $50 billion, one institution. Ethereum's entire TVL, I think, is around $100 billion. So if you get, to your point, like 3 or 4 of these guys in, you could leapfrog and basically be #1 on the chart. And that money can be brought to bear and put into Bitcoin DeFi and all kinds of different things and actually enter the Web3 space. So it's really exciting to be at the nexus of that.
Well, I think the institutional capital also looks at the growth of RWA as a major, pin of what the next generation of finance is going to be. If you're floating around the top 5, you're going to, just by pure attrition, you're going to be able to garner quite a bit of investment going into those those particular programs for sure. So I would agree with you. Big move there. I want to move over to Clarity before we get into our lightning round with you. You have big issues going on right now. Of course, one of the things was getting away from the situation with the Fed chair. That appears to be off the table now, and now we're moving on to Clarity. But you got Tom Tillis coming in here indicating that ethics language is now the new red line for him with the Clarity Act. And we all know what that means. That means the Trump family. So what do you think in terms of odds of getting Clarity through now with what Tom Tillis is saying?
Well, the fundamental problem is, first you have to understand, I've worked on things like Clarity since 2022. I worked on the original legislation during the Biden administration with Senator Lummis and Gillibrand, the FIA, in the Senate. And there we wrote this big bill, and it was very modular, and it was meant to be passed in pieces, not as an omnibus. And then I testified before Congress at the House Agricultural Committee in 2022. So, it's like this is something that we've talked about for a really long time. And you have to separate concerns here. And what's created a lot of heartburn with Clarity is kind of 2 domains. So the first one's the one you've already mentioned, which is the president of the United States and his family should probably not be actors within the markets while they have power, because they have an unfair competitive advantage over the rest of us. I don't have the power to start a war. He does. I don't have the power to shut off trade in a certain area or increase the price of a commodity or decrease the price of commodity. The president actually does. So if he's allowed to make market bets or share those with other people, that's about as insider trading as you can get. It's a big ethics concern. And historically, presidents have traditionally recused themselves through disclosures and blind trust. This is the first family where they've gone front and center and said there's no problem at all. And it created a lot of heartburn, Trump coin. We went from a bipartisan concern to crypto equals Trump equals bad. So that's already one area that's very problematic. And it's hard to get through because it's like billions of dollars to the president's family and himself. The other area that has a lot of heartburn with this is the definition of a security. So when we first started this process, I sat down with a lot of people from Senator Scott to other senators to other congressmen. I had a lot of dinners. I got a little fat eating at the Capitol Grill there in DC. And we talked a lot about, well, one of the biggest issues is no one wants to be a security. But you have a lot of things that kind of look like a security, you know, yield-bearing stablecoins and these other things, these Web 2.5 businesses, they're kind of securities. So we got to update and modernize the Securities Exchange Act of 1933 to address these new digital securities and make the compliance burden substantially lower by allowing automated regulation and the blockchain as a vehicle of disclosure instead of a company. We do this, then Brad wouldn't really care too much. And Brian Armstrong wouldn't really care too much about the particular text in the Clarity Act because they would just have a dual asset. You'd have your stablecoin under Genius, and then you would have this additional token that's a digital security, but it still has the same liquidity Bitcoin has, and it's easy to disclose, and there's no boogeyman SEC behind it, so it wouldn't be a barrier to the thing passing. But instead, what they did is they said, you know, we're not even going to touch that definition. We're just going to try to make everything a commodity, even security-like stuff. And it creates just a rulemaking nightmare. And the other problem is there's no money at the CFTC to do this. So effectively, what they have to do is create a miniature Securities Exchange Commission at the Commodities Futures Trading Commission. They don't have the money, they don't have the people, they don't have the time. So it's going to take them, even if it passes, years and years and years, like the CFPB, to write rules for it. And it's not clear if those are going to be durable or not, because the minute Democrats get elected, they, through rulemaking, can reverse everything because it's not statutory. So it really needs to be scrapped, and they need to go smaller, deal with the security problem head on, clean that up. Once we're okay with it as an industry, which, by the way, the carrot is it creates the real world asset industry. We get $10 trillion worth of securities to trade globally. Then once that's done, the other stuff inside the Clarity Act is a lot less innocuous. And frankly, Trump is ephemeral. You know, he's not going to be president in a few years. And so these ethics concerns there will recede. And reasonable people would put things in like the president should recuse himself and not issue a cryptocurrency and trade it and let foreign parties buy it while he's in office. Wait until you're out of office.
Okay, so odds are right now, at least, you think, and I'm gonna, that'll lead us into our lightning round with you.
Yeah.
And let's just go on it right here. So you and I, we would endorse the Clarity Act without even reading it. I'm assuming that's an absolute no for you.
No.
Yeah, okay. All right, so my only position on this would be if we were to get clarity, and I understand your argument about that, and it's possible that the Democrats could take the White House in the next presidential run. It's possible. But at the same time, at least having some kind of framework at least at this state, do you not think that's important enough from a global position of what's happening everywhere else around us, whether it's in Asia, Europe, with Mika, et cetera? Do you not think that's enough to just say, okay, maybe we need to pull this through and then we get changes as we go?
Yeah.
Thoughts on
so
that?
what you do is you run a retroactive text. So it's called retrodiction. So you say, if this law was in place in 2009, what would happen? Ethereum would be a security, XRP would be a security, ADA would have been a security, and there's no path for them to really meaningfully escape it. And there's no court that's going to decide because the law is now on the side of the SEC. Right. During the time of the XRP litigation, the law was ambiguous, and so they were able to kind of split the baby, and the primary sales were security, but the secondary market wasn't. So that's one dimension of it. The other dimension is the SEC has already issued guidance under the new chairman, and they physically declared what is a security, what's not a security. And that is sufficient, if we allow that to grow and foster, for a lot of the ambiguity in the space to go away. It's going to be very difficult after 2 or 3 years for a future administration to go in and overrule the prior SEC guidance and say, hey, we just didn't like that, so we're going to do our own thing. So if you're going to pass a law, you have to pass a law that actually accomplishes something. And also it has checks and balances on how the law is going to be administered. In a video I did, which I highly recommend you check out, I found 4 separate attack vectors in the current bill as written that a adversarial SEC could use to make something a security forever and never allow it to become a commodity. So when you have those structural problems in the law, you don't really want to pass it as it is because you already know how to weaponize it. So it's better to actually have the ambiguity, because at least then I can roll the dice with the courts. Otherwise, what the SEC will do is just simply cite clarity and say there's clarity and we're good to go. And what'll end up happening is there'll be a wealth transfer from new projects to old projects. Why Brad is so for this is XRP and ADA and other things, we're exempt. We're going to be commodities no matter what happens. We're not securities. But new projects, they're always going to be securities. And what they could do is lobby future administrations to make those projects securities so that they never have to compete with them.
Yeah.
Yeah. And that's my problem with it.
Okay. All right. We're going to try to speed up here because I got a lot of good questions for you. And one is this one right here. What's actually more of a danger right now? Lazarus and AI or quantum threat?
Well, right now, Lazarus and AI, absolutely.
Yeah. I'm in agreement with you on that one for sure. Bitcoiners will successfully hard fork Bitcoin by calling it a soft fork, and nobody will care.
No, they can't escape that. If they're going to hard fork, everybody's going to know it because the node won't work. And then that guy's going to be just every day be the most miserable bastard and complain about it on Twitter. There's no way to escape that.
Okay. Conspiracy theory here. Layer 2 Bitcoin is actually MicroStrategy, hence the pushback to upgrade Bitcoin because of all their new products and services they've got.
Yeah, no offense to Mike Saylor, but I've met Mike Saylor. I don't think he's playing 4D chess.
Okay, all right.
So it's impossible.
All right. Let's go with this one. KelpDAO hack destroyed all bridge sentiment and trust for the foreseeable future. Do you think that is true?
It's like the meme, man. Like the guy with the noose around his neck. He's like, first time, you know, I was like, we have bridge hacks every week. We don't give a shit anymore. I don't think it destroyed it.
Jeez, okay. I'm going to say I'm a little bit scared of bridges, and I feel like I'm pretty advanced out there. But then again, sometimes for new people coming into crypto, it's not even what they don't know that matters, because they wouldn't even really understand this, you know. So
right.
It'll be interesting to see how this really is affecting the market. How do banks respond if Clarity Act passes? Will they accept it, start innovating, or do they continue fighting and try to undo benefits for DeFi?
Oh, they'll accept it and dump a ton of money into crypto, and then they'll begin immediate litigation to destroy all the non-bank cryptos using the Clarity Act as a weapon.
Wow, that's a dystopian future.
That's what they've always done. You know, when Sarbanes-Oxley was passed, or the Consumer Financial Protection Bureau, or any of these things. And that's why the banks keep getting bigger and the small guys get wiped out.
You get smaller, yeah.
Yeah.
If Clarity Act passes, what will Ripple do about the XRP token utility? Do you think it'll be nothing, or would they enable buybacks and revenue share staking?
Oh, I don't think they're going to enable any buyback. They're going to keep dumping XRP and making billions of dollars, and then buy hard assets with a company that's disconnected, and XRP holders will have no ownership of those. You don't get the prime broker. You don't get any of that good stuff. They own real USD. That's been their MO for 10 plus years.
Let's argue this for a second. They are putting money when they sell tokens back into the XRP ledger ecosystem, so that would not be at least an investment in that ecosystem. Would you not agree?
Well, what they should do is find some way to connect their business model to XRP buybacks directly. I mean, this is what Hyperliquid is doing, and these other things.
Yes.
They use the system, they buy stuff back. There's a reason they've gone from number 30 into the top 10 displaced data. Those buybacks are real nice. And so if their business model, they say 20, 30% of what we get goes into XRP buybacks, that'd be awesome. And it would make XRP a very attractive relationship. But right now they have no financial incentive to share the wealth and no statutory incentive. And I'm cynical because I saw Block One. Remember back in the day when they raised $4 billion for EOS, and then they immediately said we have no fiduciary obligation to the EOS token, and Block One ran away with all the money. It's hard.
Bad.
You know,
that would be bad. You know, that's a civil war waiting to happen. When I mean civil wars, because the XRP community is very passionate and powerful about that.
Yeah.
Canton will successfully sell privacy and permissionless features to institutions until the incentives dry up.
Yeah, 100%. It's the same old crowd. They're cut from the same cloth of the people that destroyed the market in 2008. You know, it is what it is. I don't even worry about them, to be honest.
Okay. All right. Let's move here. Proof of stake will become the favored plan over proof of work by whoever the next administration is.
Yeah. 100%. It's environmentally friendly, and the token holders typically have rights, whereas proof of work, they don't. So it's easier to work with that within any statutory framework.
Would you not argue, though, that or at least make a case that there's enough investment by defense, government, and the global stage on proof of work in Bitcoin that would maybe be at least agreed to by the new administration?
Sure, I don't think there's going to be a statutory problem where they ban it. The EPA
Yeah.
may have some issues under like a
you think they'll
Democratic
favor? You think they'll
Yeah.
favor the proof of stake?
Yeah,
Okay.
because there's just so much more you can do with it. Like you can vote on forks and all this other stuff. And when you're a politician, you're like, well, more dimensions of governance flexibility means better
Yeah.
outcomes for the investors.
What's more likely to get banned in the U.S. before midterms, Polymarket or X?
Polymarket, 100%.
I'm on the same boat. I think Polymarket gets that if there is a possibility, you think about just the way it leads right now, especially on the political side. I saw the chart just a little bit ago. When you take sports out of the equation, Polymarket is leaps and bounds ahead of Kalshi in terms of penetration. When will someone be able to send USDC from Coinbase directly to a Cardano wallet?
Well, they can already do it. So
That's like
USDCx
USDCx.
auto converts.
Yeah.
Yeah, but it auto converts when they send it through.
Oh,
There's
it
never going to
converts
be
directly into USDC.
Yeah, so there's a bridge that does that, and it's real time. You can use it today, right now. You
Charles,
can send it through.
You're scaring me here because I don't like bridges. I'm a very conservative
Well, but the
guy,
bridge
so-
is facilitated by Circle itself. I mean, and the root of trust is their asset and their
Is on
chain
their
on the ARC
side.
network. Yeah, and
Interesting.
so you trust Circle, so you trust Circle. You can't be
Kinda.
like, well,
I don't know
I
if I
trust
would
them
say
here,
that.
but I don't trust them over here.
Again, I don't trust the government. So
Yeah, you got to understand Circle. What USDC has become is the EVM circle, and the non-EVM circle is really USDCx. And so when you look at Canton, and all these other projects, and Bitcoin itself, the intention is to grow the USDCx side of the house. So convertibility between the two, it has to be trustless and seamless, and that's what we've been working on with them. And it's seamless from a user experience right now. You can go straight from a Cardano wallet to Coinbase or Binance into USDC, straight from USDC to Cardano and back. It's a one-to-one for it.
here's one for you. SNEK goes cross-chain to Sol and ETH via midnight. Could that happen?
I could. I don't think it's a problem, but they're very loyal to the Cardano ecosystem, and they love the ecosystem. We love them. But it's a great community.
I'm going to put you in the middle on that one. Okay.
Yeah, it's hard to
put you
say
in the middle.
because cross-chain can mean a lot of things, right? They can cross-list the asset, but will the Kraken listing move from Cardano to like Binance Smart Chain or something like that?
see.
I don't think that'll ever happen.
Ondo and X stocks, tokenized stocks become tradable on Cardano.
Ooh, that's a
think?
good question. There's a lot more work we have to do to make that seamless and easy, like with the USDCX side. But I can see a world where that happens in 2026,
Okay.
2027, somewhere in that
I'll
time
put
frame.
you on slightly yes, not all the way in on that one. USD1 flips Cardano in market cap before Trump ends his term. Yes, grift continues, or no at DeepX?
I don't think that's going to continue to grow. I think the
Okay.
maximal extraction has occurred.
Maskable MEV has occurred.
Right.
Why has no blockchain focused on its efforts on point of sale, 0% merchant fees? Why haven't they done that? I mean, I feel like I argue this a lot, and then I realize, well, institutional is where the money is. Do you
Yeah,
think
well,
that's the case?
we have that with Midnight. When you look at the dual tokenomics with Night and Dust, you can have provider pay or user pay. So anybody who has Night can subsidize the Dust cost of the transaction. So you can create worlds where merchants and users have feeless transactions with Midnight, and you just leave it up to that model. That's the advantage of a dual tokenomic system, is that you can separate the speculative side and governance and control side from the consumptive side, and then the consumptive side can be further segregated between who pays. Because you're right, this question is really smart. When I go to google.com, I don't put a token in to make a search. It's free, right? So the vast majority of consumers expect free transactions and free utilization of the system and some subsidies somewhere else, like advertising, to cover that. So you have to have a token system that can facilitate it, and a dual token model lets you do that. So Midnight's one of the first cryptocurrencies to have that capability.
But the issue is, right now, you'd still have to fight Visa and the merchant clearinghouses, all of the basically the institutions that have pretty much propped up point of sale forever, versus going the route of saying institutional business is just easier to get to. profit-wise?
Yeah, the first step is the network itself has to have provider pay or user pay. And then the next step is how do you bridge the legacy component of it? And that requires some breaking into that system and some use of standards.
Which is
the good
hard
news
part.
is it's not impossible, and actually having banks like Monument, that can be one of those verticals that you look at, but it's certainly a lot of work. And we've poked some holes in that cup as an industry. There's a lot of cryptocurrency debit cards and other things like that, but we haven't been able to get completely there. But I think in 5 to 10 years, it's going to be a solved problem.
Well, and listen, it's going to be a domino effect, I think, because the first few that fall will start to accelerate in the industry, and then you're going to see the winners, that come out of it. If Canton got hacked, there would be no DeFi United Fund donations to help save it like Aave.
That's true. Live by the Federation, die by it.
Yeah, I'm on that boat as well, which is great. I mean, I'm loving to see what's going on out there with the DeFi United Fund. We just covered that today. So, listen, Charles Hoskinson, it has been great having you on the show. Thank you so much for being straight up with us on the lightning round. We love that, and we'll definitely get you back in. Thanks for coming in.
It's been a lot of fun. Thanks, Paul.
If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.